Hey guys, and welcome to episode 2 of my dividend portfolio. So, in the previous episode, we put £1,000 into the portfolio and we bought multiple stocks throughout my portfolio. Now, those have all bought, and I've now found the other version of Trading 212, which I think is a lot cleaner and a lot better to show what I'm buying and other graphs like that. So, just to go over my portfolio really quickly, before we bought the stocks, we were actually ranging between 10% and 9% profit. And ever since we put that £1,000 in, it sort of adjusted the prices, and we're roughly sitting about 5% up at the minute for all the gains we've done. So going through, we have got some decreases for this week, and we've also had some dividends come in. And all we're going to do, the £250 we put in for this week, I have some stocks identified already, which we're going to pick up. There are two stocks which aren't dividend stocks, but I think the kind of area we're in at the minute, it's very volatile. It's very much in the future, so it could be a decent growth stock. Now, I'm not very keen on growth stocks because it doesn't give the other benefits of a dividend, but these growth stocks do seem to have a lot of potential and do seem to be able to make a lot of money. They have gone up a lot lately, and I believe it's something worth putting a little money in for the future, and hopefully they can make it. So the first one is the safest out of the three, and this is the Vanguard Emerging Markets ETF. Now, the reason I've done this is because my portfolio is quite heavy towards the West and to Europe. I don't have any exposure into sort of the Eastern market, and I do think looking at how it's been for the past couple of months, it's going to be one of the forward economies going forward. So I do want a bit of exposure there. So because I'm not sort of smartened up on all the better companies to pick out there, I'm going to use this Vanguard ETF to basically get a broader range of the market and at least get me some exposure to it as well. So it has increased a lot lately. It's been gradually going up ever since it sort of bottomed out around the sort of time of the coronavirus, and it's only grown up since. So I'm going to try and get in for that. We're going to put about £100 in there just to give us a start, and it also puts us level on the other Vanguard funds we have in the account. So we're going to go for that, and hopefully we can track how that goes for the rest of the year and compare it to the other ETFs we have. I think comparing it to the S&P along with the FTSE 250 will be a good sort of indicator on how well the Eastern market is doing compared to the West and Europe. So we'll buy that, and I'll update you on the next one. So one of the two growth stocks, this is NIO, a Chinese electrical vehicle company. Now, as you can see, I've already got 0.042 shares in my account already, but that's just simply because I wanted to make sure I remembered to buy some when I was next putting some money in. During the week, I just started to have a quick look around and see what's available, and if I do find anything I like, I'll either put a little bit of money into it or put it onto my watch list, so we can talk about it on the following week and just say, look, I've spotted this, I'm going to put this in the portfolio, and the reasons why I'm going to do that. So the reason why this is going to be put into portfolio, we're going to put roughly about £50 in it just for a start, and then during the year we'll build upon it. Electric vehicles, as Tesla's proved, is the way forward, and it's going to be a massive market in the coming future. And because of what I think has been this previous year, is a lot of the technologies which wouldn't have come for a couple of years have been fast forwarded. So it's becoming more of a reality due to the fact that the way we're using technology is changing. So electrical vehicles are definitely something in the future. Now, Tesla does have most of the real estate in the electrical market, but as we've seen with all previous sort of motorized vehicles, China does have some form of cheaper alternative, and along with that, it does have a form of use. I think if it was to be pushed right, Chinese electrical vehicles could have a massive impact in how we live. So I'm only going to put a little bit into it. It's not something I'm going to go massively into. It's just something so I've got some exposure like that ETF, and just say I've got something electrical vehicles as well, because I do think for how well Tesla is growing, I do think it's a bit high, and it's just such a hyped up growth stock in my opinion, that I think that having something like it, but much more in a different market as well, could be a massive bonus for my portfolio. Now, let me know what you think about this. I'm interested in what you point out about any stocks I have in my portfolio, any stocks I'm buying, if you think it's right or if you think it's wrong. So please give me any feedback you think. And if you've got any suggestions of other stocks which are working really well, which I could look into and possibly go through the next video, please let me know. But we're going to put £50 in this one, and then I'll come back with another stock. So very similar to the previous stock, this is another Chinese stock, and it is for autonomous aerial vehicles. So obviously, along with the electrical car, I believe a lot more vehicles which are using sort of air traffic will be more available in the future, and I think it will be another form of transport in the future. So this is a stock which is really for the future, and we'll just be putting £50 in it again. It will be something which will be done gradually throughout the year. Similar to Neo, it will be pretty much the same V2 stocks. I'll keep the same sort of investment in them every time. When I invest in one, I'll invest in the other. It's just another slight little percentage of my portfolio which I'll put towards growth. And it's just two stocks where I think I can put a little money in every now and then to probably get a bigger gain than what my other stocks are. The majority of my portfolio is quite safe and it's quite blue chip, and I just like to have a bit of volatility and a bit of stocks which are a bit different and have the ability to achieve a lot of growth percentage. And as you can see, in the past 3 months, it has grown a lot. 390% over 3 months is massive for a stock. But I do believe that's just for starts. I believe there's a lot more potential as time goes on, and it only gives me enough time now to just keep building it and building up in my portfolio to be able to have a decent chunk of it by the time it really starts to go up. But again, let me know about this one. I do think it's a bit of a out there sort of pick. My brother was very keen on it. My brother's a bit of a meme investor, and he was been telling me about this and Neo stock for a long time. And it's only when I've sort of looked into it, I think it does have potential. So we're only going to go small into it for now, £50, similar to Neo, and we'll see how we go. So just going to put in 2 more stocks, and I'll let you know what they are, and I'll just go through a quick run through the portfolio and any dividends we've had this week. So one of the other stocks I'm going to buy is some Bank of America, only because it's probably my choice of bank out of America. It was between this and JP Morgan, and to me, Bank of America offered more stability, and I believe it was just the choice. JP Morgan is also a very good bank. I will not say that I won't pick that up as well in the future, but for me, Bank of America was just the option to go at the time. Now we're just going to pick up another £50 of this and just add that to the portfolio as well. And once that's bought, I'm just going to pick out the last one. I think it'll be AT&T, but I'll just come back when I decide. Yes, so the final stock which we will pick up for this week is AT&T. Now, as you can see, it is on a bit of a slide, and AT&T does have notorious problems with its management and stuff like that. But I think with what they're going to do with the streaming service in the future, will really start to push up the stock price. The management has changed over the previous couple of months, and they are trying to get better and trying to improve sort of their debt and their management and all the other companies it's holding which aren't making money. And the bonus of the fact the team with Warner and all the future sort of movies and content it released on that streaming service, I think it's still got potential. And as we know of AT&T, the dividend of 7% is really, really good. Now, obviously that ties in with the risk of the fact that they're not doing so well at the minute. But as you can see, not so long ago, they were sort of spiking and they are starting to come down a bit. So I'm just going to go in with them. At least with AT&T, while I hold the stock, I will get a dividend anyway. So I'm hoping that'll counterbalance over the long run. As I say, with my stock portfolio, everything is bought and invested for the long run. This money I'm putting in every week will not be touched for at least the next 5 to 10 years minimum. So that's why I'm putting stocks in and putting money in now for the long term. Long term, I want to build this portfolio up to where it provides a set income from the dividends for the year. So that is my last stock I've picked for this episode. I'm just going to go through quickly what we've earned in sort of dividend and a quick breakdown of how the portfolio splits up, and we'll go from there. So because of the time I'm recording this, I'm only pretty much showing everything after I bought from last week. All the stocks I've gone to buy this week still waiting for the markets to open. So pretty much this is the aftermath of what we bought from that £1,000 last week. So as you can see, 2 of my top 3 companies are from the oil side. I do believe that oil will still be a part of our future. I believe these 2 companies will change their approach and move into a more economical and green way of supplying energy. And being from my sector of work, these 2 companies are still very much needed for the construction side of the business and the construction side of the world. Apple, of course, it is what it is, and along with that, pretty much Vanguard funds make up a nice chunk of the top 10, and other companies which pay dividends as well, such as St. James's Place, Coca-Cola and Nike, make that up. So this week I have had some dividends come in. It's pretty much just been from the ETFs and also from Pepsi as well, but it just shows that once you've got these ETFs sort of set up, it does provide decent sort of streams of income once you get that portfolio big enough. Now, I look at these dividends and they're not a lot. They're always sort of 10 pence or 15 pence or 5 pence. but not a lot of money. But once they add up to everything else, and once that portfolio grows as a whole, it can start changing from pence to pounds, and that's when it does start to add up. Is I'll be able to purchase more and more stocks. That's where the dividends will be going for the foreseeable. They'll just be buying more and more stocks over time. But yeah, that is pretty much it for this week. As of next week, once everything is sort of settled down a bit, I'm hoping to just go for a bit of a news segment, just any changes to stock prices and what's happened and stuff like that. But that'll be the end of this episode. If you have enjoyed, please like the video, and if you've enjoyed so far, please subscribe, because I'm going to try and keep this weekly for the foreseeable. And if you have any questions about the stocks I've bought, my portfolio, or any questions about your portfolio yourself, which you think I can help with, please leave them in the comments. I want to make the comments a nice engaged area, so please leave them, and we'll see you in the next video.